is Sandeep Anand. Today I'm going to explain about the ubiquitous word fintech in financial planning and wealth management. Fintech is fast spreading and fast gaining momentum in terms of implementation across the landscape of financial industry, whether it is trending from wealth management, investing in the payments world, in real estate, in savings, you name it, fintechs are present everywhere, and every bank, major bank like JP Morgan, Citi, Chase are all betting big on fintechs, and they are making huge investments in the fintech industry in US. And not only in US, it's across the globe. And especially in today's topic, I'm going to explain the leading fintechs in US, which are focused in investment, in savings, and wealth management. And the target audience for these fintech is today's generation, which is the millennial population, who are having no time to do analysis of stocks and mutual funds. Rather, they just have to do some autopilot way of savings. And there are many products that has come up in the last decade, and there are few which have gone ahead and on the way to becoming unicorns. And today we will discuss each of those and understand what those fintech companies provide us with investment options, especially for the millennials who are fast who are more focused in establishing the auto savings mode. These auto savings are nothing but, the auto savings and auto investments are the core concept of these fintechs, which are focused in investment and wealth management. How they do it is through a powerful phenomena called robo advisory, and they are much automated. They are AI, artificial intelligence driven algorithms, and these algorithms, in fact, the underlying layer are these algorithms and so-called robo advisors, which goes ahead and invest the money that gets allocated in the savings account. And these fintech players provide those savings account, pulls your money every month automatically, and auto allocates these money across ETFs, that's nothing but exchange traded funds. And they do this continuously. It's hassle free, very low cost of management, and there is no need to time the market or worry about analyzing and understanding businesses to invest in equities. There are many advantages. Some disadvantages are like it is becoming a rage, it is becoming a bull, and excesses are created in, especially in the robo advisory led ETFs and passive investing. The so-called passive investing is becoming and creating excesses, which is a word of caution that we need to consider. And with that caveat, let's get into and understand which are the leading players, fintech players in US, who are providing investment and wealth management.
So let's get into the first slide. These are not sorted in any particular order. I just randomly put it. First one is Betterment. Second one is Acons, which is both are investment and savings financial planning tools or applications. First one, Betterment, is an independent online robo advisor with minimum fee and zero minimum customer account setup. So most of these fintechs are focused in investing, wealth management, financials like financial planning and things associated. And what we see and what we observe here is these are apps that are created considering customer experience as the primary aim. So if you see, there are options like minimum fee, zero minimum customer account setup, hassle free, no paper, digital account setup, just an app on click of it, which you can just fit it and just fit it and forget it. You just set up this whole apps, set up your accounts, and that's it. And the robo advisors take care of auto allocations, auto investments to ETFs and many other things. So the customer experiences is of key focus for these new age fintechs, and that is something to note. And all of these CEOs have kept that as a key focus, and it just shows, right? I mean, exuding their minimum fee and easy setup. All these are great advantages for customer journeys. So here Betterment Digital charges 0.25% of assets under management annually. Betterment provides, they have a premium service. Betterment Premium provides unlimited phone access to certified financial planners for a meager 0.4% fee, and they do need $100,000 minimum account setup for premium services. But you, as a common user, we can always choose the normal app which allows us to invest through the robo advisors. Betterment is a fast-growing company. They manages $15 billion assets under management today, and they have around 400,000 customers, which is a staggering number. The CEO is John Stein, a brilliant entrepreneur, and the company is growing really fast. I mean, it's clipping around 100% year-on-year growth, which is mind-blowing. The next one is Acorns, very famous, very fast proliferating among the millennials especially. Acons are another digital robo-advisory services who competes in the same space as Betterment. Acons accounts require again no minimum balance. However, they charge clients of $1 per month on balances for below $5,000, while accounts over $5,000 pay $0.25 per year. And this was founded by Jeff and Walter Cruttenden. Acons is again another very fast growing digital robo advisory wealth management firm. It has an app that allows users to link a number of debit and credit cards. The app takes the round-offs and invests the remaining on behalf of the user. So it makes the user really agnostic to the whole process. I mean, we as customers generally keep the change in the savings account, and that just doesn't multiply or it doesn't get invested. So I will and what Acons do is round off that to the next highest integer and put that money when it touches some $5 or something into the investment account, and that gets invested on a monthly basis or consistent basis to different exchange traded funds, so-called ETFs, and these are allocated and invested automatically in autopilot mode by the robo advisory. Robo advisories are nothing but driven by artificial intelligence, and they span across a multitude of investment options like different types of ETFs, bonds, and other financial products. They take care of allocations through the algorithms, and these are robo advisors are driven by algorithms. Let me bring an example so that we understand the context in perspective. So if John purchased coffee at Starbucks for say $2.19 on his linked credit or debit cards, the app automatically rounds up the purchase to an even $3 number, and the Starbucks receives $2.19 debit, and the remaining 81 cents gets auto allocated into his savings account. Once the accumulated rounded up amounts reach a upper band of $5, the amount then gets deposited into an Acons investment accounts automatically, and where it gets invested in exchange traded funds, so-called ETFs, through the Acons robo advisors. Now, exchange traded funds is a concept of basically they are index funds. These are different index funds traded over exchange, and it could be bought by anybody. They represent a market on a large scale. An index, so-called index, as the name suggests, they can be indexes in developed nations. It could be in emerging nations. It could be theme-based thematic funds, and many other sort of funds are there. Even Nasdaq has got its own traded fund. So these robo advisories just automatically allocates to the exchange traded funds, and so there is no involvement of a financial planner, there is no involvement of an investment manager or banker. These gets auto allocated for a common man that serves the purpose of reaching the investment goals, although it might not grow at the same clip like the buying direct equities, which has more risk associated as well as more returns as well. But exchange traded funds are still a great way to invest for common person. The next product I would go through is Wealthfront. Wealthfront, which started as a bank, has expanded its horizon to a fintech focused on wealth management. Wealthfront has leading digital-based automated robo advisors, again, which provides varied investment products, tools, and tax advantage strategies. Key advantages, again, very small management fee, great customer experience, fees of just 0.25 percentage, but there is a $500 minimum amount for the account requirement, so you cannot have zero balance. They offer a diversified set of asset classes including stocks in US. They even put it in emerging markets. They have dividend stocks, real estate, estate and bonds. So it's more diversified investment classes and assets, and they span across developed emerging nations as well. They focus on other kind of asset classes like real estate and bonds. They offer tools for financial planning for users, for retirement planning and other things like house mortgage planning. Wealthfront also has capability to connect to third-party data sources such as Redfin and Zillow for home pricing projection. So it basically shows the asset holdings that user has in terms of what wealth user he or she is carrying through the app. And they, because how they do it is by integrating with the brokerage services at the back end or through its own services that is invested in through robo advisory. And they also interconnect and get the latest data of your home pricing by connecting to Redfin and Zillow and other new age mortgage applications, and you get the real-time pricing projections. Wealthfront was founded by Andy Rashleff, and they manage around $11 billion assets under management, again growing at a fast clip at 80 to 100%. The next app or the next financial fintech firm that we have is Stash. Stash is one of the most popular fintech that allows users to incrementally invest small amounts of money. It's again an investment app. An investor can begin with just $5, but Stash charges between $1 and $9 driven by account types. So they do have a charge associated. Advantages are that no minimum account balance, low management fee for simple online brokerage account, and hassle-free way to invest in stocks through ETFs. So these fintech firms are based on the concept that investing is still better than just keeping the money in the savings account. And investing often it's difficult for money managers to beat the market, so they have done it in such a way that it's a periodic systematic investments done in ETF, so the dollar cost averaging is achieved. At the same time, there is no additional burden on and dependency on different investment managers to manage their money and provide huge amount of management fee. So Stash also provides premium services in user education and guidance in selecting investments. This help beginners definitely in investing a lot, and Stash also rounds up users' purchases to the nearest dollar value, just the way we saw Acorns does, and they move it to the savings account and invest that when it reaches $5. Another key highlight is that they offer fractional shares of the companies, which enables investors to own shares of high price stocks. For example, Amazon, which is priced roughly around $1,800 they get a fractional shares when they're purchasing at low dollar amount like this. So Stash and Unicorns are pretty much hand in hand similar products, but and both are targeted to provide hassle-free investment services to customers. One user might definitely take a look at both the applications, try using each of these: Betterment, Acorns, Wealthfront, Stash, and whatever we're going to see ahead. So these are different type of applications that comes up with a lot of value associated adjunct services, which is worth looking at. Each user has their own different demands, different need for different tools and products. To see a dashboard view, for example, somebody would like to see the real-time pricing of their holdings in mortgages. So there are different services that users seek and different values that these fintechs provides. The next one is Personal Capital. Personal Capital is another digital hybrid robo advisory service again that provides regular and robo based advisory and wealth management. They offer a variety of free investment management tools for the users. So Personal Capital is known for its the repertoire of products and tools that it provides to the customers, in addition to doing the retirement planning and financial planning. And these tools come free, and that is the advantage, and that's a value Personal Capital provides. Again, the account setup requires a minimum $100,000, so that is a differentiator here. They require a minimum amount to get the financial advisory services. But again, the tools are many. There are many tools out there which are available free for common users who can just register and use them. They come up with benefits like dedicated financial advisors, multiple financial tools, as we discussed, to view your savings, how your expenses are happening. They provide a lot of analytics based insights into where the expenses are, where what kind of expenses is causing the majority of your personal expenses or discretionary expenses. Tax planning tools and advantages. They also provide 401k fee analyzer, which parts of the investment portfolios has huge fees associated with it. They track investment portfolios, with good insights into different suggestions that comes up. It has a lot of auto suggestions as well as analytics based suggestions that comes up for common users. Another advantage with personal capital is the availability of stocks that can be directly purchased than just indexing or ETF. So that is a differentiator again here. Personal capital provides a way for users to invest or buy directly stocks, that is than just depending on robo advisory based ETF indexed investing. It was founded by Bill Harris, again growing very fast. They have around $9 billion assets under management, growing at a good pace for that base at 20-25%, which is pretty good. And the last in stock today is Robinhood, a very famous US based financial services company, just focused majorly on investing, providing investing choices in a slew of options like stocks, options, ETFs, cryptos. Again, cryptos is not something that many of the others don't offer. Robinhood provides all this through commission-free services for its user. Again, Robinhood is basically focused on providing best-in-class service for the users, which with low cost, that is through commission-free services. They provide this for a $0 minimum deposit to customers, very similar to the other fintechs. They don't provide mutual funds to invest in. And Robinhood was selected under Forbes 50 for most innovative companies in 2019. They were also selected as one of the top 10 startups in US, published by LinkedIn just a couple of weeks back. And Robinhood has seen massive growth again in customer base, now touching close to 6 million customers in 2019. A very prominent and fast growing, fast emerging investment application or apps. Robinhood is we're soon going to take over more customers in its base, and definitely worth keeping track. All of these are available, are not for any investment idea. These are investment products or investment apps and tools that can be used by customers, especially the new generation millennial population seems to be more interested in index based and ETF based investing, and they are tending to have this passive, they are called the passive funds or passive investing techniques. Passive investing techniques are nothing but it's an index ETF investing, just based on robo advisories and algorithmic based allocations, which are self and which works in autopilot mode. So these are the products. There are many other products in the market which I might not have touched today, but these 6 definitely can be considered by users to track and to do financial planning, to do savings, to do investments, to do at a very low cost way, very efficiently, how you can invest. Hope this session was useful for all the future investors, and please do try out these applications and many other which are in the market, maybe which we will cover in the later sessions. Thank you.